Hello and welcome to this July 16th, 2010 video version of Invested Central's Chart of the Day. I'm Tom Boley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we are taking a look at the Volatility Index, or the VIX. When you look at the VIX, it's really it's the implied volatility of the market. It's what the market's expecting. It's measured by taking a look at the S&P 500 options and seeing how they're priced. I won't get into a whole lot, but basically the volatility index is a gauge or a measure of fear in the marketplace and what the market is looking for. Whenever the VIX is rising, what we have here on this chart is the VIX plotted on a one-year chart along with the S&P 500. And what's important is to know about the VIX and the relationship with the S&P 500 is that when the volatility index is moving in downside action, like we saw here back at the end of 2009 and then also early in 2010, anytime you see that the VIX is moving in a downward trend, generally the market is moving higher. So volatility comes out of the market as prices continue moving higher. When the market starts getting fearful and panicked and you see the market dropping, that's when you're going to see spikes in the volatility index. So almost every time you look at the chart and you see movements down in the S&P 500, you're going to see corresponding movements to the upside in the volatility index. That was quite evident back in April. And then again in May, you can see a huge uptrend here in the volatility index. Ran from just a little above 15 to over 47.5. During that time, we had about a 10% drop in the S&P 500. Actually, more than a 10% drop in the S&P 500, probably about a 15% drop. Now, since that time, we have seen the volatility index come back down into, I won't say a normal range because it's still elevated, but it is in a much lower range than what we saw back in May when the market was very fearful. So things have started to calm down. You can see that anytime the market starts to tack on some strength, we see the prices moving higher, then the VIX settles back down. We bounced up in the VIX with the last bout of selling in June, and then here in July so far, the VIX has moved all the way back down to test support as the S&P 500 has been rising again. Now, from a technical formation standpoint, you can see that the VIX made a big move up in April to about 23, pulled back for 2 days, came all the way back down to about 18.5, and then blasted off through 23, and that makes $23 or 23 a very significant support level on the way back down. Notice we got all the way up to 47.5. When we came back down this first time, we hit the 23 level. We bounced back up, really putting in a double top at 37.50, but using candle bodies you can see this downtrend line that was connected, but we bounced as the market sold off, and then as we've gained strength again in the market over the last couple of weeks, you can see we came right back down to this 23 level. Now, from a bullish perspective, what the bulls hope will happen is that this 23 level on the VIX, the support level, gives way and the VIX actually drops down below 23. If that happens, chances are we're going to see some more strength in the market. Now, the bears, on the other hand, like the fact that after going down for about 7 consecutive days on the VIX, we've started to see some rise in the VIX. In other words, the market is anticipating more volatility, and usually with volatility comes movement to the downside in equity prices. Now, whether or not this is another move straight up to test this downtrend line, or whether it's just a quick bounce before we break below 23, hard to tell. But in the near term, I would say that the VIX is showing bearish implications for the market overall, and we'll just have to see with some big earnings reports coming up whether or not the VIX does break down below the 23 level. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at InvestedCentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.